Well, we're into holiday season. I'm sure you have a number of parties to go to, a number of last-minute presents to purchase. We're going to get a pulse on consumer trends, but also get a sense of what's going on in the startup community with somebody who kind of wears two hats in that. She's the CEO of Canadian fashion brand Smythe and an avid investor in the startup space. Joining me now on Inset is Kathryn From, CEO of Smythe, founder of Wonderment Ventures, and founder of the Wonder Collective. Thanks so much for being with me.
Great to be here.
So CEO of a clothing brand, but then also you're looking to make investments. First, I'll talk about, what you do as the head of a retailer. What does the environment feel like to you right now? Slow down, or are people being more selective with their choices?
Well, I think actually the retail environment has been quite resilient from our perspective. Holiday has actually done really well. And I think to your point about people wanting to start dressing up maybe for the holidays, the last few years have been a little bit tough in holiday, frankly. And I don't know if it's part of the sentiment from the upheaval and the turmoil in the world, but sparkle is back. I can say from the Smythe perspective, we have actually done incredibly well this holiday season, not just through our own channels, but also through our major retail partners, such as Nordstrom, Neiman Marcus, Holt Renfrew, and the like. So holiday
is back. I got sparkle bow earrings that I'll be wearing to my Christmas party tonight. I mean, part of the reason it might have done poorly in the past couple of years is because everybody got COVID around Christmas, and then you couldn't have parties.
Yeah.
You mentioned Nordstrom. How much of a hit to you was that Nordstrom left?
Nordstrom Canada leaving was a hit, unexpected as well, obviously, which was difficult. But I think that one of the great things about Smythe is that the company's almost 20 years old, actually. So we have a really solid base and growth, and so the attitude is, well, we'll go out and make that up. And certainly we were able to pick up, a lot of those sales ourselves, as well as through our other major partners in Canada.
Do you have a sense of like the return to office sort of vibe? Because that's how I think about your clothes. They'd be great to wear to work.
Yeah, so that we're certainly seeing that trend. Companies are starting, and on our startup side, we're seeing it as well. Companies are asking people to go back into the office more often. So whereas at the beginning, of the return from COVID, it was maybe 1 day a week. Now it's looking like 3 days a week for a lot of companies, and that means that customers are wanting to invest more in their work wardrobe. Smythe is certainly known for its blazers, its tailored looks, and suits, and so for that we've really enjoyed that return to work. It's really helped us.
Let's talk about that startup ecosystem, because quite frankly, when I talk about retail here, I'm talking about bankruptcies, high-profile retailers leaving this country. And when I talk about startups, I'm talking about them in tech and AI. I mean, what is a retail startup entrepreneur? What are they building on?
So when you talk about retail startups, I'm going to interpret that as product, basically consumer-facing products. And I think, to really break through the clutter, because there is a lot of clutter in the marketplace. It seems like everybody has a great idea. You really need to have a product that performs. That is one thing that we're seeing the consumers want. So, for example, sustainability is critical. And a lot of people are looking at that, but that is not necessarily the number one driver. It's really, how will this perform for me? How will it meet my needs? And so, for example, we have a company in our portfolio called Everest that makes wonderful hair care with a very strong sustainability message. But if they didn't perform and give you amazing hair, then that sustainability message is not going to be enough to drive them.
That's true. I've dabbled in some of those shampoos, and I'm like, what is this? What's going on in my hair? Do you think about the rate environment, whether we're in a recession? Does that affect your decision to deploy capital, or how these companies are able to bootstrap to where they need to go?
Yeah, I think it's a very interesting time. Certainly from a startup perspective, I think financing is going to continue to be really, really difficult for them going into 2024. 2023 was tough, and I think that a lot of companies sort of sat on the sidelines thinking things would change for 2024. We're not seeing that. I would also say that, interestingly enough, in the public markets, in the private equity-backed companies that are larger, they've all taken hits on their valuations. We're not seeing that yet in the angel community, which I find extremely interesting, because investors, to your point, we have a lot of other places we can put our money. And so I think, to be fair to startups, I don't think they really know how to value their company. They think, I need to raise, $500,000. I want to keep 95% of my company, therefore my value is $10 million.
Well, is it also because a lot of them are women in the product category, and statistically, women have lower valuations when they're female-led companies?
I don't know if statistically, I don't think that the understanding of valuations is specifically necessarily female or male related. It is true that women get far less of the share of investment money at the startup stage. And it's one of the reasons why we focus on that area, and one of the reasons we created the Wonder Collective, which is a group of very successful women who do angel investing into that startup community.
Your friend and mine, Bruce Croxon, is a venture capitalist, and we talk about the competition to get it. If you want to get into an AI deal, how hard it is. So kind of trying to find your edge. But in the space that you're in, is there a lot of competition? Is a lot of people trying to get to the space that you're trying to invest in?
I think at the very early stage, it is harder, frankly, for those companies in the consumer-facing products to raise money. I think there is a lot more money for AI, for tech. In the consumer-facing ones, you have to deal with path to profitability, as an example. In tech, I've never quite understood how you value tech startups. But for consumer-facing products, it's pretty straightforward. How are you going to be profitable? Do you have great margins? Do you have global appeal? And when you're starting out, you haven't necessarily created very much of that value. So going out and looking for very elevated valuations is a little bit different from the tech world.